Would that be a terrible thing?
No, I wish they were gone. I really do.
So assuming that those big banks, the pseudo banks, if they weren't given money, our kids' money, they'd go under. They'd be broken up. Profitable sections would be gobbled up by somebody else. Would that be a bad thing, or was the
Not
bailout
necessarily.
a good thing?
I think we need a good debate about the too big to fail concept, and I think also the too complex to fail concept.
Too big to succeed, I think, is the other.
You know, there are legitimate notions like that out there. But I don't think we've really thought our way through this. I don't think we are well served by having a policy that says certain kinds of institutions cannot fail. That takes a lot of market discipline out of the system. And so we've got to figure out how to deal with that so that if they do get in trouble, you have a mechanism for dealing with that, and maybe you split up the company and over time sell it off to others. I don't know what the solution is.
An orderly wind down of failing assets would be the government's role in this. The idea that
what they did with S&Ls. They took them over and sold them off.
And what we're doing with Chrysler, actually, but nobody realizes it.
Unlike your banks have to go through this long bureaucratic process in order to get the insurance. Plus, you have to pay for the insurance.
Absolutely.
And therefore, you guys are covered. These other ones did not have any of that, but they had a lot of political might, and therefore they got basically insured, but they didn't have to go through the rigmarole.
That's really interesting.
Am I saying that?
You know, the most interesting thing about that is that no matter who's president, they get the money. George Bush, Obama, they get the money. And, you know, it just goes to show you who's running the country. It's not the Republicans or the Democrats. It's the banking system. Why are we bailing out Citigroup? Why are we bailing out Bank of America? Well, because we're afraid that if they fail, it's going to be horrible. Like when Lehman Brothers, we allowed one bank to fail, Lehman Brothers. When that failed,
not a bank, by the way.
Well, but they would have been if they would have been allowed to survive. They would have been right back where Merrill Lynch and everyone else is, you know, J.P. Morgan Chase and all the others that they turned into banks. But why don't we let these things fail? And the answer is, one, because there's some argument that if we let these fail, then we're really going to have a depression. Everyone's going to lose it. You're not going to be able to get money out of the ATM.
There'd be a huge
but that's how much of that is true and how much of that is sheer fear. And the other is that these are powerful players. You know, their executives go to Washington, get a job, come back, get a job on Wall Street, come back, get a job on Washington. This isn't cynicism, Don. These are facts. You can read the Wall Street Journal and see examples of this every day.
It's the same thing Don Childers does. I mean, he gets a high-paying job, he goes back, gets another high-paying job.
This needs to stop.
Held the same job for 35 years.
This isn't capitalism, okay? It's not. It's a fixed market.
And you and I agree that businesses that fail need to fail.
And I'm in that boat too.
Right,
and it'd be good for your banks because they'd have a chance to pick up the pieces and maybe build something.
It also seems completely unfair to your banks, the community banks, which have done the rigmarole, which have paid the insurance to make sure that if this happens, they're covered. It's not that you had the political ability to pull in money if this bank failed. The Greeley Bank, New Frontiers, they're FDIC insured. Their depositors will be made whole, assuming they had less than 250 grand in there. But you did all that work beforehand. When your bankers look at what goes on with these type of banks that Al's talking about,
there's a lot. There is a lot of
anger
out there. They've been very frustrated. But at the same time, as they reason through the interconnectedness of the banking system and so on, they kind of held their nose and reluctantly said, yes, we think the stabilization bill of last fall probably is better than doing nothing. And, you know, true, it didn't have the details that any one of us would have picked, but when you're picking between the two, they held their nose and said, yes, this is better than nothing because it stabilizes a system that was about ready to crash. And, you know, I don't know for fact, but I know that Representative Perlmutter, as an example, talks about talking with Chairman Bernanke of the Fed and Secretary Paulson and how they viewed it as just on the edge of the abyss. The system was that delicate then. And we truly did have a credit freeze then. Banks didn't trust each other and weren't lending to each other. We've made a remarkable amount of progress since October. And now we have a significant thawing of the credit system. There is credit moving, maybe not the way people want it to move on the old easy loan standards, but it is moving, and the industry is serving the customers quite well. We don't have the...
What about simple fairness here? Because it seems like your bankers, you know, did due diligence. You're tough to deal with. You didn't make the loose loans. You had 2 bank failings. That's historically higher than usual. But at the same time, where's the equity? So Wall Street goes around and gives money to guys like Al Lewis and don't even care about it, and they get bailed out.
Blow my credit score.
That's my whole goal. So where's the fairness in here?
Well, there is none.
Where's the reward for you guys for you're kind of like the mortgage holder who paid the dues.
That's
and
true.
then I'm the mortgage holder who didn't pay, and Obama says that's all right, we're going to bail you out. There's no fairness here. And why should any business do your style of business in the future? Why not do it the way that Citigroup did?
That gets back to the whole issue about the too big to fail thing. You've got to have market discipline. You've got to have consequences for your actions, rewards for doing a good job, other kinds of punishments, if you will, for doing a bad job. I do disagree with some of Al's characterizations about the amount of the troubled loans in some of these portfolios. I mean, our membership does run from small community banks to Wells Fargo. I think they're all in pretty good shape. But the non-bank sector, the brokerage houses and insurance companies and so on, weren't government regulated and examined to any significant degree. Not like our
and they never
industry.
said they were. It's not like they had any FDIC insurance, if you put it there. All right, we've only got a couple minutes left. Let's look forward. What do you predict Colorado, nationwide, in the next couple of years when it comes to banking?
Well, I think there's a lot of smart people predicting more bank failures, and I think we're going to see them. I don't know if it's going to be 1,500 or 1,000, but I think you'll see more. I think you'll see more in Colorado, too. Those
Isn't
are
there
just
bailout fatigue?
That's just the probability. The second thing is I just want to raise this question. Chrysler Corporation got almost $8 billion worth of our taxpayer money because we were going to save it. Well, guess what? It's in bankruptcy. So what happens? Well, now they're not going to pay us and they're bankrupt anyway. What if? I just want to ask this question. What if the problems of the banking system are bigger than the federal government? What if all this money that we're giving this bank is for naught and a lot of them go under? I just want to raise that question because I don't think the smartest people in the room have the answer to that. I don't think Bernanke has the answer
That's right.
to that.
I got guns in the basement. I'll be fine.
Have some
And I
canned
agree
food.
that nobody has a corner on wisdom on this stuff. But to try to get back to answering your question, I think we're going to see a slow improvement in the economy this year and next, but it's going to be gradual, and it's going to be painful for a lot of people who can't get credit, but that is going to be the reality that we're facing right now. We're going to see some consolidation within banking. We might see another failure or two, but generally, I think the bulk of the industry is in very good shape and the depositors are protected. You're going to see some voluntary mergers of banks take place in this state and across the country. You're not going to see them on the mammoth scale that we saw last fall, where you have major institutions being combined because the government didn't have a choice, in effect. But I think you're going to see a slow return to calmness and normalcy. That doesn't mean it's going to be smooth. There will be a few hiccups along the way.
I worry that we're going to hit a false bottom, and then when we start coming to grips of how much debt we're putting onto the next generation, that there's going to be all sorts of
Now
problems.
that is a big problem, and inflation. Those are big
That's my
worries.
worry.
All right. Well, I tell you what, we'll stay up and do nightmares later about
Okay.
that. Don, thank you. Al,
Thank
thank
you.
you. This has been a kick. And thank you. Tell a friend about the Independence Institute. Go to independenceinstitute.org. Listen for me late nights on 850 KOA. We'll see you next week.
Bamboozle, nuka, noozle, bippity, bop, she-gall. You jibber jab, bamboozle, nuka, noozle, bippity, bop, she-gall. I mean, you keep on talking, but you don't know where to turn it.